Hey traders, welcome to Quantsapp. My name is Varun and intraday trading is still one of the hot topics lately. Why do people love trading on an intraday basis? The answer is quite simple because everyone likes to make quick money, right? So intraday, for people who do not know, it's inter-a-day. So that means within one trading session or within one live trading session, you are entering a trade and squaring off. Right? So if you do not hold any position at all on an overnight basis, you are an intraday trader. Now, if you see that the population of retail traders is generally consists of intraday traders. Why so? Because just as I said that it's quite easy. It's easier to manage risks. A lot of brokers allow you to set stop losses for auto square off on an intraday basis as well. Right? So the one thing that people still struggle with is, despite having so many intraday traders, the strategies that intraday traders love to use. Right? A lot of people I see go and search online, they try to read some books, they try to find something or other for their intraday trading needs. Well, I'm here today to showcase some tools inside of Quantsapp and try to do some analysis in front of you so that you can analyze all of these things on your own as well. So be a data driven trader and let us start. So we'll start with a bit of index trades. So we'll try to start with charts, and after charts we'll try to look at some stocks as well. Okay, so first things first, just go to the analyze section, and under chart section you will see charts hyphen order and trade. So you'll just open it. So I mentioned charts, but what exactly is order and trade? So no one knows what exactly order book data is. So I am here to explain that. Let me just add Nifty here. So Nifty and Bank Nifty both are quite liquid, but Nifty is overall regarded the better index, since it's not as much volatile as Nifty. So a lot of traders love to trade Nifty here. Okay, okay. So let me just get rid of this. Okay, and let me just pull it up. Okay, so this is a 1 minute chart on Nifty. Okay, I'll just try to do this. Okay, let's see. So opening and then closing. All right. So this is a 1 minute chart on Nifty which you can use here. Now you might be wondering what exactly are these two indicators. So these are order book indicators. Okay, so order book, for people who do not know, it shows you the executed quantity at the market price. So this is Nifty's futures chart. Rolling futures is something I've implemented here, but if you want, you can select the specific date of the expiry as well. So you can just look at that particular futures data. Rolling futures just shows you the current expiry futures in front. Okay, so how do you analyze this, or how do you analyze this data during the live market? So a lot of times I see people trying to reduce the market with the help of breakouts and breakdowns. So that is a good overall strategy, but a lot of breakouts are unable to sustain. So for that we have this data to back the theory of breakouts and breakdowns. So you can actually track real participation with the help of this. Okay, so you can see there is buyer initiated quantity, seller initiated quantity. So like I said, the initiated quantity or the executed quantity at the market price. So everyone was asking me today, were you able to predict this up move? So the answer is quite simple. You can see here that the green spikes started to increase, especially during the market bottom. Right, when the market bottomed out, you can see that there were these huge spikes of buyer initiated quantity, and that is how the market has moved up. Right, so in a very simple, clear visual representation, even if I forget about the chart, if I just show you this particular thing, you can clearly see that buyers are more aggressive, and somewhere around here you can see sellers are more aggressive. And if I just show you the market again, let me just go here. You can see when the sellers were aggressive, the market was falling. When buyers activated, when we could see that buyer spikes were bigger than seller spike, the market moved up for a reversal. So that is how you use this for participation. This works on indices as well as stocks. So this is a very simple and effective trading method. especially if you are trading indices, because indices have more volume as compared to stocks. So you can go and identify this thing. Okay, moving on, what I would like to showcase is a method of identifying stocks. Okay, so a method of identifying stocks is quite simple. Just go to the track section, and under options OI you will find triggers. Okay, so as the name suggests, triggers shows you your trade initiation point. So normally when we talk about triggers, it's an initiating point of something, but in terms of trading, it's a trade initiation point. So wherever there is open interest, resistance and support, triggers will show you that in a single page, right? So on a single screen, you can see on the left hand side, we have the data for highest calls or heaviest OI call options. And on the right hand side, you can see we have the data for highest puts or heaviest OI put options. So how do you decode this? Now you can see in the middle, we have all the symbols, and below the name of the symbol, we have future price. On the left hand side, we have the data for heaviest call. So we have data for strikes. So we can see that in Aarti Industries, current price is at 726.45 rupees. The heaviest call strike is at 730 rupees. Okay. Is there an opportunity of a breakout? Could there be a breakout? The answer is yes. So since Aarti Industries future price is trading very near its heaviest call strike price, there is a good chance that the heaviest call strike could be broken. Since option writers have major stake on this particular strike, if option sellers or option writers start losing money once the future price crosses that threshold, we option buyers or intraday traders have a very good opportunity to go for a directional trade there, right? So it just shows you which stock could go trending on an intraday basis. So that is how you trade. But how do you identify stocks? I don't have time to manually go and analyze each and every stock, right? We have around 187 scripts in the entire F&O basket, including the indices. So for that, what I like to do is just sort based on change in open interest. Just click on change in open interest. It will show you change in open interest in an ascending order. So it shows you the percentage change of open interest on that particular option. So I know that in Shri Cement, 30,000 strike has experienced the most unwinding. So I can see here, it's 33%, 33.61% unwinding on the 30,000 strike call option. So I know that the call sellers there are expecting that Shri Cement could move up, or in general, they are unwinding. Okay. Now, how do I know that which stock is about to experience a breakout or which stock is about to experience a breakdown, so that I can identify those bullish and bearish trades respectively? We have the data of call difference. So call difference is something that I use, and it just shows you how far off your future price is from the heaviest OI call option strike price. So for example, if I take Gujarat Gas, for example, okay, here is Gujarat Gas. Gujarat Gas future price is at 641. Its heaviest call strike is at 650. Now, how far off is future price from the heaviest call strike? So call difference is telling me it's 1.29%. This means that Gujarat Gas's future price is 1.29% away from the breakout. Okay, so we can still anticipate a breakout. Why? Because there is negative open interest or open interest unwinding. So even before the breakout has actually occurred, we know that this particular stock is moving up. Why? Because call writers have unwinded their positions. They've probably unwinded to a heavier strike or to a higher strike, and that is how you know that. Okay. Now, there are green numbers and there are white numbers. What do those suggest? Now, green numbers are highlighted when call difference is between positive 1%, positive 2% and negative 2%. So that is your trade zone. So it shows you positive 2% and negative 2% because we have to choose the stocks which have either given a breakout recently or they are about to experience a breakout. So that is why you sort based on change in open interest, so that you find all of the strikes or all of the stocks which have unwinding on their heaviest strike, and based on that, whichever stock has a call difference indicated in a green color, you go and enter that trade. So you can go and trade Gujarat Gas, you can go and trade Page Industries, you can go and trade Hindustan Unilever as well. On the bearish side, you do the same thing. If I just click on change in open interest, it will sort that, and you can see Ramco Cement. Ramco Cement is there as a breakdown opportunity, and there is a good chance that Ramco Cement could further fall from here. 800 strike is the level which shows you major put writing, and it is unwinding heavily, right? Future price is also quite near it, so there is a good chance that a breakdown might be occurring, right? Same thing we have around Bandhan Bank, but Bandhan Bank is in ban. How do I know that? Because the symbol is notified as red. So if the symbol name is highlighted in a red color, that means the stock is in ban list. So you cannot enter that trade anyways. Your brokers will not allow you to enter that trade. Even if you do enter that trade, then there might be a penalty coming your way. So it's better if you just stay away from that trade. Okay, let me show you a breakdown or a breakout that has occurred. Okay, so if I just sort based on change in open interest, let's look at BL for example. Okay, BL is a good stock. Okay, BL. I have scrolled it all the way to the top. You can see it's easier to view. So BL's future price is at 325. Its heaviest call is at 320. Now, is there a breakout? Yes, the breakout has already occurred, but I knew it way before because call difference is negative. Is it still in the trade zone? Yes, I know that. How? Because call difference is highlighted in a green color, right? There is unwinding on the change in open interest side. You can see negative change in open interest, and I can see that there is a good enough call difference. So that is how within seconds you can go and identify a trade or identify a stock for a bullish or a bearish trade on an intraday basis. So if you are an index trader, you can use the order book data. It's quite simple. You just have to sit in front of a screen and you just have to monitor that chart. But if you are an opportunist trader, if you want to trade stocks as well, then we have the triggers tool, which helps you in identifying which stocks are about to give a breakout, which stocks are about to give a breakdown. One thing I will suggest everyone on a day-to-day basis is just check liquidity finder. So you can just go to the search option, okay, and I'll search for liquidity finder. If I just type LIQUI, you will find liquidity finder. It is a tool that helps you identify liquidity in stocks, right? So whatever stock you are about to trade, you are planning on trading, just make sure that that stock has a 5-star rating on both the call side as well as the put side, or you can just filter it based on stars. So I'll just say minimum stars 5, okay, minimum stars 5, and filter by call and put both. So it will just show you the stocks that have a 5-star rating on both the call side as well as the put side. So there is a decent amount of stocks. So these are the stocks that you can find an opportunity in. So you can just go and search in triggers about these stocks, or you can just go to triggers and then search about those stocks over here. So you don't get into a trap where there is illiquid options, and the reason behind that is because if you go and trade an illiquid option, the ask and bid, the spread between the ask and bid is quite higher. So if you go to place market orders, that sometimes is difficult for you. So that is why I generally recommend to you to not trade around those stocks. Just go for some liquid stocks overall. As far as strategies are concerned, I would say a simple long call would suffice. Okay, a simple long call would be fine. So just go to the trading option and you will find options architect. So you can just go to the options architect, and under options architect you can select long call, or for a bearish strategy you can select a long put. Okay, so simple naked option buying is something that I would always recommend for simple intraday trades, right? If you want to monitor all of these strategies, you can monitor these strategies. You can save your positions here as well. So let's say if I am bullish on Nifty, just for an example, you can select a strike, whatever strike you want. Let's say by default it keeps the at the money strike. If I just go and save this strategy, then I can monitor the strategy MTM in real time. So this is something that can help you with your exits as well. So you can keep track of your profits and you can exit timely as well. All right. So that is it for me. Thank you so much for watching. If you have not subscribed, make sure that you subscribe. If you are new to Quantsapp, make sure to find the link in the description. It will be the first link in the description. On the top right corner, you will find a helpline number as well. In case if you need any assistance from our side, you can reach out to the support agent right there. Thank you so much for spending this time with me. I highly appreciate it, and the support has been tremendous lately. All the best, and I will see you guys very soon in the next video. Thank you so much, guys.